well, we've got Sanjeev Prasad, Senior Executive Director and co-head of Kotak Institutional Equities, joining us on the show with a perspective and helping us to understand in greater detail the critical news that came out last night. Sanjeev, morning. Great to have you with us. But first, the ONGC news, which we were all eagerly awaiting for, did come through finally last night, with the government announcing that they would undertake that 5% stake sale at a price of about 290. And that's the auction that's opening up tomorrow. First, give us a sense of what you make of the price band that the government has set in.
I think it's quite a reasonable price. If you look at 290 rupees, and if you believe our 2013 EPS of, say, about 35 rupees share, you're looking at a stock which is available at about 8.3 times on 2013 earnings, and about 3.2, 3.3 times on EV/EBITDA basis. So I think it's quite attractively valued. Now, the important thing to keep in mind here is, how much assurance do you have on the 35 rupees EPS for 2013 in light of, a fairly non-transparent subsidy sharing system. Having said that, our own numbers are fairly conservative because we are building in something like $110 a barrel crude price average for next year. We're assuming some increases in retail prices of diesel, LPG, kerosene, which I think will happen during the course of the year, and 50% share of the upstream companies. So I think that's as conservative as we can get. Even with that set of assumptions, our net realized price for ONGC comes to 52 compared to the gross price of $110 average. And on that basis, we get about 35 rupees EPS. So I think, we are being fairly realistic in the assumptions. Now, the valuation can be a lot higher if there is, a lot more transparency on the subsidy sharing system or some sort of a pricing formula is put in place. Just to give you some sensitivity of ONGC's EPS numbers to crude prices, for every $1 per barrel increase in net realization, your EPS number goes up by about 0.8 rupees. So, for example, instead of 52, which is what we have for next year, net realization becomes a 57. In that case, you're looking at an additional 4 rupees of EPS, or closer to 40 rupees. In which case, the stock would be easily, at least 350 rupees, if not higher. So I think 290 is a pretty decent price in the context of the current valuations, and also the fact that in the medium term there should be upside to earnings as India realigns domestic prices to global levels. The net realization of ONGC will accordingly move up. And at some point in time, even gas prices will be deregulated in the country. Currently it's capped at 4.2 in line with Reliance's T6 gas price. And hopefully, whenever the government is in the position to raise gas prices, that upside should again reflect in ONGC numbers. But that's, 2 years down the line.
Sanjeev, morning, Neeraj here. The skeptics would say that better late than never. But you think that maybe clarity on the subsidy would have actually helped get probably a better premium for ONGC than what the share auction is eventually being priced at currently?
Well, no question about it. But, clarity means, if, for example, the subsidy sharing arrangement is 1/3, which is what was the original formula, in that case, you're looking at earning numbers would be much higher. But if the clarity comes in, the government fixes that at 50%, then obviously the numbers will get impacted. So it's a double-edged sword. But having said that, any clarity would be welcomed by the market, whether it is in form of a fixed subsidy sharing formula that, upstream companies bear, say, 33% or 35 or 40, whatever that number may be, irrespective of where crude prices are, or you decide that on a certain pricing formula, ONGCs, will get some linkage to international prices based on a floor and cap, etc. So, you start with 55, and depending on where crude prices are, you accordingly, get a slightly higher price. So if that were to come through, then clearly, the markets would welcome that a lot more, and that would reflect in the form of a higher multiple maybe, and, maybe the earning numbers don't change, but people would just be a lot happier that there is some clarity and we know how to go about looking at earning numbers of the company. I mean, just to again give you numbers, if you look at for the first 6 months, the subsidy sharing formula was based on 1/3 arrangement. And then in the third quarter, it became 38% for the full year. As of now, for the fourth quarter, nobody knows what that number would be. But I think most analysts have taken a very conservative approach, which I think is fair in light of, constantly changing goalposts in the sector. So, for example, we have taken 45% share for the full year. But even in that case, we get about 29 rupees EPS for the full year, which means the stock is at 10 times on 2012 numbers, which is more or less in the bag, I would think. And if you believe our assumptions for next year, then you're looking at an EPS number of 35. And if you have a lot more favorable subsidy sharing arrangement, it could be higher. So I think that's the best way to deal with this in light of, the fact that there's not a lot of clarity on the subsidy sharing system or a pricing formula.
Sanjeev, so of course subsidy is a sticky spot as far as, all these OMCs is concerned, but specifically for ONGC, one other factor that's probably going to come into play is it's going to be the expansion plans that it has in place. And in fact, one of the big developments that we've seen in recent times, that ONGC Videsh in tandem with GAIL is looking to bid for Cove Energy's assets in Africa, in Mozambique more specifically. Now, given that we've got other international oil and gas majors like Shell also in the fray, what is the sort of fair value that they could be looking at, or do you think there's a chance that in case of an overbid, this might turn out to be not such a great idea at all?
The reservoir or reserves numbers as far as the Mozambique asset is concerned are still evolving. We have all sorts of numbers in the public domain ranging from 15 TCF to 30 TCF recoverable reserves. Clearly that asset is going to be a lot more valuable in the future. We don't know, what that number would be. That's the whole problem. Because companies have not shared that much data, and whatever we read is more, based on whatever is there in the press. But looking at the prospects over there, in the sense, wherever an Adarko and, company drill, everywhere you have a pretty big reserve being discovered. So I think this play will keep on evolving over a period of time. Now, what is the price we want to bid for that today? Very hard to take a call on. Of course, you have some numbers based on whatever Shell has bid and whatever PTT Energy has bid, and now ONGC and GAIL are also looking like they may put in a bid. Let's see, it's very hard to comment as to what is the right value over here, because as outsiders, we have absolutely no clue on, what is the amount of reserves and, what is the production sharing contract with the Mozambique government. So it's very hard to build a model as of now. And it is, remember also, production will not start before 2018-19 at the earliest, so it's not something which we can take a view on today itself. If you look at ONGC's historical track record, they have been pretty good in acquisitions. Whether it is Sudan or Vietnam or Russia, most of the acquisitions have been very, very decent, barring, I would say, the Imperial Energy one, which was probably done at the top of the market. But otherwise, they have a pretty decent track record on acquisitions, and hopefully they don't overbid for this asset.